front?
A very obvious question for me would be energy, because the NVIDIA chips are energy intensive, and we know China over many years has been trying to tackle the E out of the ESG. It's been trying to take down some of the energy demands, and as we talk about an AI-enabled world with massive energy demands, surely if it's starting from scratch, China would want a less energy intensive chip.
Yeah, so energy efficiency is key because you want these high-powered processors to be able to run but not use as much energy. That becomes a lot more important, I think, beyond the data centers. We start to talk about AI being processed on devices like smartphones and laptops. That's incredibly important part of the equation. But at the moment, where China seems to be playing is in this data center. It's trying to first, what it feels like, is come up with chips that are on par from a processing point of view with NVIDIA before tackling perhaps the energy efficiency part of the equation. It's certainly something a lot of these companies have spoken about if you look at some of their websites and some of their product descriptions. But right now it's about how can we create a chip that can be on par with the processing that NVIDIA can do with its GPUs.
So everybody's rushing to catch up. This is almost like the Tesla trade, isn't it? Everyone rushing to catch up on electric vehicles as well. It is very clear that others have caught up with Tesla in many, many ways. Of course, they've got other assets as part of their company, but in terms of making cars, they've caught up. How long is the time period before the Chinese, before the Western rivals catch up with NVIDIA, which then, of course, will impact the investment decisions of our viewers as well? Because they will catch up. It's just a question of timing, isn't it?
At this point, the US players in particular and AMD really have a better chance of catching up than the Chinese players. I think China has a very unique set of challenges in its semiconductor industry, and there's three major ones. The first are the number of US sanctions and export restrictions we've seen on the Chinese sector. On those lithography machines, exactly, and various other ones. Many firms like Huawei, like Biran, a couple of the firms I've mentioned are on this US entity list, effectively restricting them from access to US technology. That could hold back development. On top of that, you mentioned the restrictions on lithography machines. Who are going to make these Chinese design chips? It's got to be SMIC, China's biggest manufacturer, not TSMC, due to some of these restrictions. Problem is, SMIC's technology is generations behind TSMC, so getting to the leading edge, the cutting edge of chips is very difficult, but also capacity. We've heard stories about Huawei bringing out new phones using a 7-nanometer chip, which is not the most advanced chip on the market, but that's taking up a lot of SMIC's capacity. So all these chip players rushing in saying, please make my chips. SMIC just doesn't have the capacity. And the final challenge here really is what I mentioned earlier, is that software piece of the puzzle. NVIDIA's success has been built not just on the hardware, but also on its ability to create this developer platform. That's something that's going to be a big challenge for these Chinese players to replicate. So no challenge really from China in the near term, but what you can see are the early stages here of an industry trying to build up its own domestic prowess.
After rising 150% in the first half of 2024, NVIDIA's stock fell since mid-July as investors took in some possible negative news. The company's most recent artificial intelligence, AI, chips for the data center, which generate most of the company's income, were allegedly delayed. Experts have also questioned how long NVIDIA's biggest clients will keep devoting billions of dollars to their ambitions in artificial intelligence. But over the past few weeks, those worries may have been allayed. Here's why, before the end of 2024, NVIDIA's stock could rise to new heights. Last year, NVIDIA's flagship H100 graphics processor, GPU, for the data center became the industry standard for the AI sector. Because GPUs are made for parallel processing, they can process many jobs at once and do so at high throughput. They are also perfect for processing massive volumes of data, since they include built-in memory, which is essential for AI inference and model training. Over the next several years, data center operators may have to spend $1 trillion developing GPU infrastructure, according to NVIDIA CEO Jensen Huang. Because of the significant opportunity that this creates, the company keeps designing new chips with more processing power and improved energy efficiency in order to stay one step ahead of the competition. With half the power consumption of the H100, the new H200 GPU from NVIDIA can execute AI inference at nearly double the speed. It is currently shipping. However, the Blackwell GPU architecture, which the company recently introduced, offers an even bigger performance boost. For instance, AI inference will be performed at a startling 30 times faster rate by the new Blackwell-based GB200 NVL72 system than by the comparable H100 system. Each GB200 GPU is anticipated to cost between $30,000 and $40,000, which is similar to what many buyers originally paid for the H100. This will result in a significant increase in cost efficiency. Because of this, demand is probably going to be far higher than supply. For their own interests, other tech companies also want additional processors to build AI. By the end of 2024, Tesla plans to deploy a cluster of 50,000 GPUs online to further hone its AI-based self-driving software. By the end of the year, Meta Platforms hopes to have a staggering 600,000 H100 equivalents in use for training the next Llama large language models, LLMs, which will drive new artificial intelligence, AI, features on Facebook and Instagram. Regretfully, NVIDIA is unable to meet the demand, along with Tesla CEO Elon Musk. Oracle chairman Larry Ellison reported having dinner with Huang lately. It seems that he and Musk pleaded with Huang to give them more money so they could buy more GPUs. The limited availability is hardly surprising. In fiscal 2024, which concluded on June 30, Microsoft alone invested over $55 billion in capital expenditures, CAPEX, the majority of which was allocated to chips and AI data center infrastructure. In a similar vein, Amazon predicts that its capital expenditures will surpass $60 billion in 2024. Because of this, NVIDIA was able to record $26.3 billion in data center revenue in just its most recent fiscal 2025 second quarter, which ended on July 28. This represents a 154% increase over the same period last year. If not for supply limitations, the outcome might have been even more significant. At the moment, NVIDIA's stock is 15% below its all-time high. However, I believe that within the upcoming months, it will regain that ground and then some. Investors will soon begin setting the stock's price according to anticipated earnings for the upcoming year. Wall Street projects $4.02 in earnings per share for NVIDIA's fiscal 2026, putting the stock at a relatively low forward P/E ratio of 28.7. From that angle, it actually appears fairly inexpensive. A number of businesses, including Microsoft, Oracle, and Meta Platforms, have made it clear that they want to double their capital expenditure on artificial intelligence in the upcoming year. Since they are among NVIDIA's biggest customers, it reduces some of the uncertainty surrounding NVIDIA's potential financial result. Thus, by the end of 2024, I believe NVIDIA's stock will have exceeded its all-time closing high of $135.58. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
NVIDIA, the shares are higher, as I guess can be expected today, especially when you see this big risk on trade. What does that tell you about where NVIDIA stands and, kind of some of the naysayers recently?
Yeah, the haters are going to hate. But I mean, we just got back from Asia and demand continues to accelerate. And like I said, demand's outstripping supply 15-1. You start to look at Godfather of AI, Jensen, NVIDIA. This is just the start of the AI revolution. We believe a year from now, NVIDIA is a $4 trillion market cap.
$4 trillion market cap. I mean, that's a huge statement to make. What's the thesis behind that for NVIDIA hitting that level?
I mean, look, you have $1 trillion of AI-driven CapEx. They're the only game in town. Numbers, we believe, go up significantly higher. I think the street's still underestimating in terms of what ultimate demand looks like here. And I think as this all plays out, it is not an expensive stock. And I think when you look next 6-12 months, not just about NVIDIA, but I think rest of tech, we believe tech could be up 25-30% over the next year.
NVIDIA leads the visual computing business by manufacturing graphics processing units, GPUs, with superior performance. The four sizable and expanding markets that the company focuses on are gaming, professional visualization, data centers, and automotive. Artificial intelligence, AI, machine learning, data center acceleration, and autonomous driving are some of the most interesting areas of computing where NVIDIA's technologies have the potential to lead and disrupt the industry. There were two factors that contributed to the stock's gain throughout the quarter. First, the stock gained from the great anticipation surrounding the advancement of generative AI and the possibility that this would require the long-term acquisition of a sizable quantity of NVIDIA's products. Second, NVIDIA reported another impressive beat and raise quarter. The company raised its revenue projection for the second quarter of 2025 over street estimates, demonstrating its leadership in the development of the accelerated computing infrastructure of today. Indeed, Huang dispels earlier speculations that the new chips could be months behind schedule, stating that Blackwell GPUs will generate billions of dollars in sales in the fourth quarter of fiscal 2025, which starts in November, as the company ramps up shipments to clients. According to Huang, data center owners may rent the processing capacity to AI developers and make $5 over the course of 4 years for every $1 they spend on GPUs. Because of this, the biggest cloud service providers in the world, including Microsoft, Amazon, and Oracle, are fighting for control of as many processors as they can. So what does this really mean for NVIDIA's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
All right, Jim made a great point, especially when you think about NVIDIA. I often, like, my analogy for that is it's like the Usain Bolt of the sector. And so it's a leader in semis, and it's been a leader in general. So, Angela, I got to ask you, I know you cover a lot of these, from NVIDIA to Marvell, Qualcomm, Broadcom, AMD. What are your favorite three out of the group?
Favorite three. So I'd say kind of our top pick right now at the moment is Marvell. It has kind of been the last couple of quarters. But when you kind of look at, specifically on the AI side of things, tied to the data center here, you kind of look at, name like NVIDIA has done phenomenal. And we think they are going to be they are a free cash flow monster, but they'll continue to see significant improvement on the free cash flow side of things. In fact, we think they hit a $100 billion run rate by the end of next year, which is, second to only Apple out there kind of within the S&P 500. But I would say Marvell is our top pick because of the fact that they will see growth accelerate, as we've now kind of seen a bottoming in most of their kind of non-AI type markets out there. Those are markets that have declined about 50 to 70%. And then when you kind of look at their AI representation, both on kind of the custom silicon side of things, the more compute side of things, as well as on, on the networking side of things, we still see some nice upside on both fronts. So there's going to be a nice combination of that kind of AI and non-AI tilt that will allow their business to accelerate. Whereas the likes of NVIDIA, even though Blackwell will kind of be a nice growth driver here in 2025, it will see growth rates start to decelerate. And now I will say kind of, in terms of our next top two picks, I would still say NVIDIA and Broadcom would be the names that we feel kind of strongest about, kind of given the growth prospects for both those companies. And we think valuations actually on both those fronts remain extremely attractive. And again, both type of going to be compute driven in terms of NVIDIA with Blackwell, and they will start to see kind of a sequential acceleration, we think, in terms of the growth rate as we kind of go into the January-April quarters. And then on broad.
As the equity markets become more volatile due to shifts in the investing climate, there are more and more chances for investment. As global central banks adjust their monetary policies in reaction to decreasing inflationary pressure, investors have had to make portfolio adjustments. Another factor causing market volatility is uncertainty about the impending U.S. election. Significant geopolitical concerns have also been present, particularly in the Middle East, which has compelled some investors to make defensive investment bets. For everyone interested in investing in the rapidly growing artificial intelligence market, NVIDIA is the greatest long-term investment to purchase right now. The business offers networking and graphical computer solutions. However, it has become a trillion-dollar business due to the high demand for its graphics processing units, GPU, for AI models and gaming. Over the last 5 years, NVIDIA has experienced a rise of more than 2,000%, making it one of the best-performing companies. Given that the AI race is only getting started, the company is still in its early stages of expansion, despite its spectacular gains. The fact that this dominant semiconductor company is still the first choice for chips to power data centers and artificial intelligence models validates the enormous development potential. In order to stay ahead of the curve in terms of market demand, cloud computing companies and other tech behemoths are investing more in artificial intelligence, AI, which has resulted in an overwhelming demand for its graphics processing units, GPUs, and other semiconductors. Among the largest tech companies that use GPUs and other semiconductors from NVIDIA are Amazon Meta Platforms and Alphabet, among others. The company's exceptional financial results have been driven by its strong clientele list. With a net income of $16.5 billion at the end of the second quarter, up from $6.2 billion at the end of the previous year, the corporation is still in strong financial standing. Its announcement of intentions to repurchase $50 billion as a result solidified the reason it is among the greatest ever stocks to purchase at this time. It also pays a dividend yield of 0.03% to investors. Purchasing NVIDIA stock at a forward price-to-earnings ratio of roughly 41 and a PEG ratio just above 0.7 is still a terrific value for a company that is seeing triple-digit revenue growth. 179 hedge funds held NVIDIA stock overall during the second quarter.